Mike Santoli joins us taking a look at the rebound in Asia. Out of this Shanghai or something else?
No, this is mostly Shanghai, and actually different ways of looking at the Chinese market through the different ETFs that cover separate indexes. More than a 2% bounce overnight. If you look at basically three ETFs that cover the large cap space in China with different slices of that market. The GXC is the Spiders China. It's mainly a large cap, mostly global companies that are based in China. The FXI, more commonly looked at as the China large cap ETF. And then ASHR, that is mostly about the A shares that is tied to the domestic Chinese economy a little bit more. So this is a very strong bounce. The question is why? Nothing too specific about what drove it. There was some talk about stabilizing the currency, a build in Chinese foreign exchange reserves. But if you look at a year to date, what you'll see is this really looks like a powerful bear market bounce. The strongest rallies tend to come in bear markets. The differential in performance among these different ETFs, you see the green one, the Asher, is much weaker. That's mostly because it is tied to the domestic economy. The other ones very, very linked to not just the banks and exporters that are driving the Chinese economy, but also the FANG of China. So if you look at that GXC, right, it's supposed to cover the Chinese economy. Tencent and Alibaba together are more than a quarter of this thing. And those stocks have been very weak. So this idea that the Chinese market is kind of showing likely losses out of the trade war, it's true, but it seems much more about capital flight. I mean, nobody thinks that people are going to be playing fewer video games in China because of the trade war, and that's Tencent. But I do think it's about capital wanting out and in advance of a potential weakening of the economy.
Couldn't capital flight be a result of fears about the trade war?
Yeah, secondary one, yeah. Absolutely. But it's not so much about on the ground today, the exporters are suffering, they're crying uncle. It's much more about, I think, flinching in advance of this likely disruption to the economy. By the way, the Chinese economy already on a slowing path. Right. So I think a lot of this stuff is exacerbating that, without a doubt.
But all that data that you just showed, I think when we have people come on and say, fade trade, it just doesn't matter for the U.S., right. They look at all those indices and say, see, here we are. We're talking about reapproaching record highs in the United States and China selling off. That tells you who is likely to suffer the most from the trade war.
It tells you which economies are levered to global trade. Yep. And this economy in the United States has never been, really. Right. So that's the benefit. That's the insulation. Absolutely.
Thanks, Mike. Good stuff.